Hello, and welcome. Today is Friday, October 7th. We are wrapping up the week after the payroll numbers came out this morning at 5:30 my time, Pacific Standard Time. And right off the bat, we saw, here's the VIX futures chart. Right off the bat, you saw the VIX sort of just explode. Okay, so when you see the VIX over 25, and you see it rising like this, if you've watched my videos before, then you know that I'm going to say special operations was designed for such a day. So I'm going to make this video as brief as I can make it because it is the wrap up of the week, and it's just more of the same. More special operations strategy being deployed because of the geopolitical news, the background, if you will, oil, OPEC Plus doing what OPEC Plus has done with the oil cut that they've done of 2 million barrels per day. So yeah, I'm going to use special operations when there is a lot of volatility. Now, in various videos, for example, if you're wanting to learn how I think about when to deploy special operations and what various parameters I tend to use. And of course, it's not a recommendation, it's just my opinion. This is for educational purposes only. Then, please watch these videos, especially this week's videos. I've put out a video every day of the week this week as time permitted. So whenever I have downtime, I am putting together these videos for you guys so that it's as helpful as it can be. So that you can see why I chose special operations and what defensive parameters I'm using for the controlled aggression that I'm deploying with special operations. Remember, special operations is a very aggressive strategy. And so when you're using that kind of an aggressive strategy, you have to control that aggression. And you do that via the various risk and money management parameters that I make available in my system here. From break even to obviously money management to move stop. And of course you have a price target and stop. And then the flatten everything finally. So as far as how I wanted to, I guess the best way to do this is to show you what happened on Thursday. So this red bar here on the daily, on the SPOOS daily, is Thursday. As I said on Tuesday's video, that the bulls were hoping to get a third green day. Somewhere here would have been very nice for the bulls, okay? Because a lot of people were hoping that this is the bottom. And by the way, it still may be. It's not over yet because remember, there's still a gap here between this price and that price. So between a little, below 3,600 and 3,650. So it stopped at the psychological 3,650 today at the ETH close of 2 p.m. my time. So, but the bulls were hoping for another green bar here. It didn't happen. You had this doji here, and it was a red bar. Ultimately, don't worry about the doji. Just the 3-day rule, it's sort of a choppy 3-day rule, but it's a 3-day rule that longer term investors, they use that to gauge how they're going to position their swing trades or their investments going forward. A lot of those guys or a significant number of them were hoping that this is the bottom, and their hope still might come true because we don't know if it's going to go below this price or not, but they were hoping this is the bottom, and now price is taken off. So if they had got another green bar here somewhere, you would have seen a lot of people pile in, I think, as to the long trade. But you got this on Wednesday, and you got this type of a close on Thursday. So it didn't even make it all the way out, guys. Okay, they definitely tried to get there and price just got rejected. Bulls really took a beating here. When that happens and you get payroll numbers coming out and the VIX shoots up right off the bat, it passes 30, and I was looking at the VIX futures, then I know how I'm going to set this up. To my mind, and in my view, and in my opinion, you don't have to do this because you have to go off of your own risk tolerance. Remember, it's your trade. It's your risk to reward. I'm only putting out there how I think about this. This is just personal opinion and for educational purposes only. And so the way I set this up is on a day where the VIX is shooting up like that. Let's look at the VIX again. I'm looking at the VIX futures, by the way. Right off the bat, 5:30 is when the numbers came out and the payroll numbers. And look at that, guys. Okay, so right off the bat. And it just kept climbing. So remember, I always say when this happens, when you're using special operations, typically, if you watch my other videos, I like to start an hour after the RTH session starts. So you want to set up your trade. So right here for special operations, you want to set it up between 7:31 my time, 7:31 my time, or Central Time. This would be 9:31, and then Eastern Time 10:31. So you're letting that initial hour go by. Plus, I add 1 minute. That's just what I like to do. If anybody wants to know why, let me know in the comments, and I'll be happy to respond to you. And then I stop looking for trades at 12:29. And so I'm not even going to use modulate break even or move stop, but of course I'm going to use money management. So this is saying that if I have net during that session 5,000 or more when trades are flat at the close of the bar, then the system should stop looking for further trades. If during the session net I am down $500 when the system or the trades are flat and at the close of the bar, then to stop looking for further trades. Or if I have 4 consecutive losses in a row, then to stop looking for trades. Now, I'm going still with the risk per trade of 30 ticks here. And so that means I am taking $150 worth of risk per trade. I am going to use the most volatile index, in my view, the NQ. And this is Friday. And I'm going to have a 1 to 20 RR. So I'm going to put 600 ticks here. I could have put 500. I could have put 700. But it's going to be somewhere around that range. Just the OCD side inside of me just wanted to do the 1 to 20 today. I could have done 550. I could have done 650. I could have done 700. But I know I want the objective here is small losses, and I'm hoping for a big win. We saw what happened to the VIX, right? That was telling, in my view, to my mind. That's telling. And when that happens, you're looking for those, big wins. You're hoping for that. That's what you're hoping for. And you're willing to take some risk for doing that, in my opinion. And I am taking some risk. And I'm saying basically if I take $150 worth of risk, then I'm okay with that per trade. That's what I'm saying. And the system could potentially make, a bunch of trades. So if I have, for example, 4 losing trades going off of the money management parameters, imagine having 4 consecutive losing trades. I'd be down $600 plus slippage. Okay, because 4 losing trades, $150, $150, $150, $150, 150 times 4. Sorry, I'm being very granular here. It'd be $600 plus any slippage. Okay, so if on the 4th trade, it would be more than $500 when that trade was flat, and therefore it would stop looking for further trades. Okay, so I'm taking about, in that case, in that scenario that I just described, a little over $600 of risk for a day like this. What am I hoping for? It would be great if I hit that number of 600 ticks, so that's $3,000, or if I stay with that trade until RTH 1 minute shy of RTH close, then if I've got whatever amount of ticks I have, hopefully it's more than any losses that I would have. Obviously, that's what I'm hoping for. I'm hoping for a big win here. So that's the kind of mindset that I would have before I enter that trade. I looked at the daily I could have done the NQ. In this example, I had SPOOs. It's really, directionally, they pretty much move in tandem. Obviously, the ranges are going to be different. The tick value is different, so you don't use the same stop you do for NQ as you do for ES, right? The ES is $12.50 versus the NQ is $5, so it's, significantly less. So your ranges would be different as well, but directionally, it's about the same. I just like to, that's just habit. I always look at the SPOOs when I'm going to make these type of decisions and then I pick the most volatile index, which is the NQ, if I'm going to trade the index. I could have looked at CL, I could have looked at the other ones, but when I see the VIX do that, then I'm looking at indexes. Okay, when I see the VIX is moving a lot of volatility, then it's got extreme volatility, then I want to look at the indexes. That's how I think about this. And so that's what I've got cooking. Let's make sure we have some slippage. We do not. So let's put in 2 ticks and let's run this and see what happens. Friday, everything else is good. Yes. And I'm very happy with that RR, the risk to reward. No trades. What did I miss? Special operations. There you go. I didn't pick a direction, guys. You see? I'm glad that happened. This proves, if anybody had a doubt, what happens if you don't have the check marks there and you have time? Nothing. Nothing happens. It doesn't run, and it's looking for the check marks. So always double check your work. It's been a long day. Sorry. So let's go ahead and see what happened. So 28.40 is the total. 2 trades. 1 winner, 1 loser. Both of them were short. So we have slippage accounted for. All right, so on a day like this, someone might think, oh, you only added 2 ticks of slippage. Let's do 3 ticks of slippage. Okay. What is slippage? Just in case someone doesn't know. So the price that you entered might be more than, for example, when you run a back test, it gives you a price, but you could have gotten a worse entry by an X number of ticks. And so we're basically making up for that and saying we're going to add slippage to the back test. Okay. And so I added 3 that, as you can see, it made almost no difference, slight difference, right? But it didn't have a material impact on it, if you will. And so, yeah, it's just basically taking ticks off here. That's 4 ticks, guys. That's more than necessary. But let's just see what happened for the day. So the first trade directionally was initially correct, but ultimately the stop went off. Obviously, we have 30 ticks. If we had a bigger number there, then it would have just gone all the way. We'd have no losses. But that's all the risk that I was willing to take. And then it entered short again. The setup is still there. And it just stuck. It basically stuck with it. It went all the way down. And it could have almost. It basically went pretty close to the low of the day at 600 ticks. So I could have put 500 for this. I could have put, anything that is a big, risk to reward ratio, which if you've seen my other videos, pretty much those are the numbers that I use on days like this. So it's going to be, generally speaking, 30 to 60 ticks and anywhere between 500 as far as the risk per trade, and for the profit target, anywhere between 500 to 700 ticks. If I'm using special operations, there's a reason why I use special operations. It's because I saw the volatility and I want to take advantage of those big swings. Okay, I'm going for home runs with that. But I am looking to be defensive with my stop. So my stop is going to be very small, relatively speaking. And then if we didn't have the VIX explode the way that it did this morning, but it was still above 25, then I would have probably deployed move stop and or modulate break even. And if it was the daily showed any type of doji, which we had on as I demonstrated here. So we had a doji on Wednesday. That means there's still a battle between bulls and bears, and that battle might not be settled until the next day. But obviously Thursday it was pretty much settled. But basically, if I get a day like that, then what I would also reduce there would be the money management. I would probably not have 5,000 as the net session profit limit. It would be a significantly lesser number than that. Probably between, I would say, 1,000 to 2,500 tops. 1,000 to 2,500 tops for the net session profit limit. Because, on a day like that, if you were able to squeeze out $1,000, $1,500, $2,000 from the market in one day for one contract, which is what I'm trading, guys, right? It's one contract. So I'm trading one contract. So basically that's a lot, right? On a day where you could have potential chop ahead. And so that's really all I have for this video. If you have any questions, if you'd like to see a detailed Zoom demo to see how this strategy works, and we'll break down all 3 strategies, historical and current PA. We'll cover special operations some more, and we'll do the newest strategy, accumulation breakout, which was available in version 5, which is the version we're in, price action harvester automated V5. and I can answer any questions you may have, and then we can figure out if this quant-based automated trading system is a good fit for your trading style. It may be, it may not be. In my opinion, it hopefully will be, and if it is, I think you'll use it for many, many, many years to come. Until we meet, take care and God bless.